Hey guys, I want to make a video on something I think is really important in low floats, and it's something I've been talking about in my recent videos, and it's essentially how low floats, how riggers abuse the order book to move stocks, whether that's a short squeeze, whether it's trapping longs, but it's essentially how these types of stocks, and here's like for example, here's TPST today, where you can have 10% dumps in 1 or 2 minutes, followed by a 10% squeeze, followed by a 10% dump, followed by a 20% squeeze. It's like it's how is the rigger abusing volume, abusing structure, and abusing uh, the order book to move stocks the way they want. And then we're going to talk about how you can use this information to position yourself, whether if you're going short, going long, what to risk, how to think about the book, all that type of stuff. So in low floats, well, you have to understand that the most important most important moments in low floats always come on these extreme moves, right? These extreme, 10, 15% moves in 1 minute. These are really the moments, where you need to be making reads, paying attention to the book, paying attention to the structure, um, and forming some type of thesis, right? So, we're gonna see. So I made a video on PXMD yesterday. This is or 2 days ago. This is a classic low float manipulated type of price action. If you saw my video, I said they set a flag in the market open, lower highs, higher lows. They fake retail out. They swipe support, right? So you get right here retail chases because it's a flag. It's breaking out. And if you see on this 10% move right here, so here's the low, here's the high, you'll see that there's no bids following this stock up. And in low floats, unless something just gets market ordered straight up, which sometimes that does happen. Sometimes you just get insane market orders straight up, um, with zero bid support except for whatever was at the bottom. Sometimes that does happen, in the market. Anything happens essentially. Market has the chance. This is why all your reads are not going to be perfect. This is why even if you learn this stuff on the Bookmap, you're going to make mistakes. You're going to take losses. You're going to have a thesis that doesn't work. All that stuff still happens. But in this video, we'll go over how you can think about these plays. So uh, you're not chasing, whether you're chasing long, chasing short, right? Or shorting it in a moment, because a lot of people are shorts who watch my content. Shorting at a moment where there's no offers above where you're shorting. So if you're chasing in the low sixes here, the order book is completely empty all the way up to 6.4, 6.5. So you're taking unnecessary risk where a market maker could come in and do something like this, where they come in, they fake retail out. There's no bids following this up, so it dumps. That's what you get, this instant dump because there's no actual bid support in the stock. Um, and then they break the lows from the pre-market and they stack a bunch of bids, right? So now these bid stacks, which weren't there before, become highly relevant, right? Because um, and by the way, the number one most important lesson in all this is you really have to understand structure and volume to make these reads. It's not that big bids always are bullish and big ask are always are bearish, right? It's in the context of the chart. It's in the context of the structure, the context of the market. How the pre-market, some PXMD, like I was bullish in my video. I talked about being bullish to accumulation, right? This week was much stronger cycle, so we're getting bigger moves this week. So market conditions are important, pre-market structure is important, the chart paint, the retail fakeouts. There's a lot of factors you have to add up. This is what makes trading hard, is knowing how to calculate the different factors, how to incorporate it into a thesis, and then using something like Bookmap for entries, right? So that if I'm going long in the 580s here, at least I have some bids down here that I'm just betting hold, right? I'm betting these bids hold, right? So that's the hard part. But this video is just going to be about order book manipulation. But yeah, often you'll see uh, So here's your retail long trap with no actual bid support, but that doesn't mean it's going to go straight down. Maybe it does, but once I saw these bids, I wasn't short this. Um, because once I saw and then just because I didn't make that read in time, sometimes I just don't make the read. I'm not in the play. But I saw the pre-market support swipe and a massive stack of bids. So the rigger's like, okay, we brought it down to the level we wanted to. We swiped the support we wanted to. Now let's start stacking the bids. The order book is essentially empty for like a solid 60 cents, right? And even more. And then so it's very easy for them to, because one of the main lessons is because this dump is so aggressive. The more a stock dumps, the more oftentimes the more empty space there is to on the ask, right? The quicker to dump, the less orders up here. That's why I circle this, less order, and it works both ways. The quicker the push, oftentimes the less bids there are down here, right? So it's a two-way street, and we use that information based on the structure, based on the volume to make decisions, right? So, uh, I longed this in the 580s, and then you could see the rigor coming in and supporting the bid. This is great confirmation that a squeeze is potentially coming. Not because one thing I learned, big thing I learned about Bookmap is just because there's bid support down lower, if there aren't follow-up bids initiating the squeeze, then it's actually a potential short. We'll see this. We'll see examples of this where they throw up some bids because it's like, hey, at this moment, we don't want this stock to go anymore. And then they initiate it. But if you don't got the follow up bids um, uh, after as the stock starts squeezing, unless it just goes straight up, what often happens is it will go up, it will stall, and then it'll do one of the tricks that I talked about in my videos, like this. Here's TPST today. See, here's a big squeeze. There's actually no bids following this up, and they start stacking the ask, right? Stacking the ask, stacking the ask, stacking the ask. So that's an example of it being bearish. But this is classic squeeze. Bid support after the support swipe. You put up the bids. You follow up the bids with more bids, and you just keep slapping. You keep slapping. You keep slapping, and the rest. The rest is history. It went straight up, right? But the big moments are the quick pullbacks, man. Like, and low floats is really one of those markets where if you're not reading these pushes and having so say you're bearish to this, say it's like, hey, I think this is a fake bull flag, right? And then I think I usually don't trade at 9:30. I'm not a big 9:30 a.m. trader. What I mean by that is I don't take trades during the first minute of market open in most contexts. Right? But I'll take ones at 9:31, 9:32. But I generally like. I think just 9:30 is a little too choppy. Sometimes you get the moves you want. Like in some contexts, you get a 9:30 high day clear out, or a 9:30 long. But overall, like when I try to trade them, I don't make a lot of money doing it. So I just tend to avoid it. But again, one of the main lessons is once you get a deep 10% pullback out of nowhere, that doesn't automatically mean it's bearish. And if you start chasing this type of stuff, if you're not making these reads and shorting, especially in a strong market punishes people who don't know how to make reads at the top of pushes, right? Because your average gets annihilated. You start chasing like low sixes and or high fives. Where if you're shorting this pattern, your average needs to be above like 620s, man. Your average needs to be up here. Now, like I said, I'm not a big 9:30 a.m. type guy in terms of shorting, and then I just thought this was super bullish. And what's great about this is it becomes like you have a clear risk level on your long, and the order book is thin. So if they start market ordering and you see the bids followed up, it becomes very, very bullish. And let's see if I can. Is it in here? Yeah. So here's an example in a weaker market, which was 1 week ago when things were really weak. Another bid support pattern where a market maker walks it down, right, and then they start throwing up bids, and there's a lot. So I saw the empty space. I saw the bids being supported, right? But on the initiation, there's no bids following it up, right? Not only is, and then there's still a bunch of ass up here that it needs to eat through, right? So in this context, I was long this. I got a little, and I was long pretty low. I was longing into these bids, so my long was, in the 315s down here, and then, but this becomes the bid support actually becomes a long trap. Now I was in with a good average, so I ended up, making. I took a little bit out and got out on the crack for a small win. Um, but this actually becomes the short, right? So there's a lot of context involved and a lot of skill involved in making these reads. But again, you get a big 10% squeeze, right? You got the bid support. Here's all the empty space, which is why this squeeze happens. But then you start getting uh, games at the top where there's no bid support. It's pushing into these asks. These asks are either they're getting filled and getting restacked. They start restacking the ask, or they don't even get filled at all. Or they flash a bid temporarily to fill an ask, and then they pull the bids. There's a lot of games at the top. Um, but weak market, this was during a week where the market is really weak. Probably best to have a bearish bias. But what's nice about this is, some people might chase down here, right? There's a few shorts in my room who, maybe some newer guys, and there's nothing wrong with this. Everyone has to learn uh, about, shorting into what looks like a lot of weakness. But what they're not seeing is that there's a lot of bid support down here, and then there's just empty space. So if you're shorting into these pops, right, in the 315s, 316s, you have to know that, like, what are you risking, right? And this is, Bookmap becomes a great tool for understanding risk, right? Because you know where the big orders are stacked, and you know where they're not stacked, so it can move very easily. This is why it moves so easily through the book until it reaches those orders, right? Now, in the right market with the right structure, it could just, you know, squeeze straight through these orders, right? Just because there's big orders up here doesn't mean it's going to stall and go down, right? It's not big ask, you go short, big bid, you go long. It's really not how it works. Um, so there's a lot of things you have to learn about reading the bids on these types of plays, right? So and reading the ask on these types of plays. Let's focus on some short. A lot of people who watch me are short, so let's talk about some shorts. TPSD. I caught the long. It went up. I took some off. I took some off at this high day, and then took the rest off in the fours. And once this $4 broke, I just got out of my long. And I was, and this wasn't that up on the day, but I really like this pattern, man. This is a classic fake 5-minute flag pattern. You get a deep pullback to support, which deep pullbacks, we can see on the book, deep pullbacks create a ton, you can't see this, but there's a ton of empty space up here. So whenever you get deep, and this is where riggers abuse retail thinking. If retail sees 6 red candles in a row, down only, they might be extremely, they might be, they get into a mindset where, man, this thing's so weak, the pump's over. This is a backside, bounce play. The sellers are going to overwhelm the stock, and they start chasing on these weak bounces down here. But in reality, the order book is so, again, they're just abusing. Whenever you get, this is why deep pullbacks in some contexts can lead to higher squeezes. Some contexts it leads to just a little backside push like this. By the way, TPSC right now, as I'm recording this, is at VWAP. It's like in the high 380s right now. So we'll see what happens with that. But yeah, this is classic. Like, volume gets really low right at support, and you get this big high volume relative volume initiation where stock goes from like 80,000 shares to 500,000 to 900K, right? You get these are the moments that are the most important in low floats, the most important. Like, these determine what is going to happen. And then what's the context of the chart, right? We had some market open action that squeezed shorts, so we got a nice little up only squeeze, right? Nice little pullback, 5-minute 9. And then, so it's like, okay, I love to see up only. I love to see the pullback, and I love to see some type of potential long trap initiation, right? And we see that TPST at the bid down here, we see them throwing up bids. These were like 40, 50K bids that they were throwing up these bids. Tons of empty space. Okay, they're looking to support the stock. You don't want to chase down here because even though they pulled this bid, what matters is the reaction, right? And I just don't I don't like shorting these weak bounces, especially on highly manipulated plays. Um, in a certain context, maybe this type of this is kind of too soon to be shorting this type of aggressive move off of support. We'll talk. I'll talk. I have had videos of when you get short little VWAP pushes like this, but in the meantime, I'm looking at the bids. I'm looking at the empty space. I'm looking to see. I'm like, okay, they pulled this bid, but see what the reaction is. They throw up a new bid, undercuts it, and then they start initiating it. What do we notice about this initiation? There's a little bid right here that immediately gets pulled, but overall, there's no bids. No bids. And where does this push to? It pushes to where the orders on the ask are stacked, right? There's empty space here. There's some orders here. Eats straight through it. And the reason there's orders here is because it's $4. So whole dollar, half dollar are always going to have random orders like they always do, right? But above 4 to 420, and 420s is really where the next stack of orders are. So if a rigger is looking to push this and retail's chasing, it's going to go from 4 to 415, 420 right away, right? And then what I notice is on this big push, I'm like, all right, this is fitting the fake 5-minute flag after up only. Nice, it's fitting the pattern. I saw the bid support where they were holding it, and then now we get our crazy aggressive push, high relative volume push, but with no bids following it up. And I'm like, oh damn! And then I was like, okay, it's starting to hit these orders at 420. I see it pull back. I see no bids, and then I start seeing some stacking, and I actually try to get in right away. But thanks to the beauty of SSR, I put some orders in the 415s, it didn't get filled, and then I put some orders in the 411s, and then I didn't get filled because I saw these ask, and what I was trying to do is I was trying to put orders just under these asks. I was like, maybe it pushes towards these asks and I get filled right under it, and then thanks to the beauty of SSR, it went straight down through these bids, couldn't chase, couldn't get any size, and I missed the trade, right? Completely missed it, and it ended up coming all the way down the 3.5s down only, right? Nice little move. Not a lot of range on this. I would probably personally hope for like the 1 minute 200 on a play like this, but believe it or not, it's actually hovering around 3.9 right now. So the thing about this type of play is backside squeezes have big potential. A lot of times they go much higher than what people think they're going to go. So I do like to be a little cautious, but this move was so extreme that I just had to take it. I just had to short this. This is very similar to TAOP, right? Very similar. Pre-market pop, zero volume at support, big high volume initiation. So this, as we saw with PXMDs, sometimes these go straight up, but what's the book telling us, right? Here's the high volume initiation. Here's some ass. These got eaten through, this got eaten through. Here's the next level. It starts to stall. And what am I seeing? I'm seeing no bids, right? And that's because aggressive moves, unless you get a play like TPST at market open here, where they're following up with more bids. And same with PXMD, where there's more bids, right? This is an example where the bids aren't following it up. Here's TPOT. There's no bids following this up, and what do? They start stacking the ask even more. They actually do throw up a bid. That ask gets taken out, it comes back down, and there's no further buying. And like I said in my video, this is where I shorted up here, because I'm essentially making this read that I know market makers like to fill an ask with a fake bid, and then either pull the bid or let the bid get sold into. And I just see, besides this one bid, there's no space. So this is how low floats work. There's no space here. There's a few orders here, and then there's no space all the way down here. So if this is a long trap, if your thesis is this is a retail long trap type move with no actual bid support, that's why it goes straight down, right? goes straight down because the order book's so thin, right? So it's the aggressive push often means no bid support. So you look at the bid support, you're reading the games that happen up here, right? You're just trying to make a read, make it. You're also looking at it in the context of the chart, right? Context of the play, and you're making choices, right? You're just making choices. But I did like that if I'm shorting up here, I can risk. And again, people ask me what's my risk, and a lot of times I'm just, I'll risk like the next bits S stack, right? If I'm shorting up in the high 250s here, um, I see orders in the 270s, and I'm like, well, maybe it does some stuff and then pulls back down. Um, but ultimately, I'm reading where the next ass stacks are in the Bookmap, higher and higher and higher, and I'm using that to make a decision um, on where to risk. Right? It's the same with my CDIO short, which, by the way, I swung CDIO from 170 and it's at 95 cents right now. I'll show you really fast. Let me pull up yesterday's Bookmap on CDIO. Sorry, I gotta copy and paste it from yesterday. Sorry, there we go. And it's another great thing. Just posting in here. So CDIO here, I'll short from the morning. Sorry, you see my mouse? I'll short from the morning, and I'm just, I see a good amount of empty space on this backside squeeze, but really I'm looking at this 175 guy. I'm like, this guy is going to be like the main resistance level, and you don't even know, is this guy even going to get touched? Is he going to get filled? If he does get filled, a lot of times I'm interested in what the reaction is afterwards. But what's nice about this is, even like I understand, especially on manipulated tickers, that big crazy backside stuff can happen, especially through a relatively empty book. But it's the big orders that matter the most. And if I'm already short, I can use that information to set my risk, or just to see what the reaction would be up here once it touches this ask, and that type of thing. But yeah, a big so is there any other really nice examples? I mean, there's a bunch. There's a bunch of like here. RVP at this short. A bunch of people in my room hit this short, right? Classic little backside squeeze, right? A lot of people think it's going to go to high day. It usually doesn't. Um, Sets a type of long structure, right? Some higher lows, lower highs, and then we get our big volume initiation, right? Big relative volume initiation, breaking $6. And again, what does the bid support look like? And they'll do games like this where they'll support the bid, they squeeze through the ask they want, and then they pull the bids, right? So you're waiting for like the big moments where this is a classic retail chase candle, right? It's a retail pattern, big volume. Here's your flag. It pushes. Retail's hitting it. What's the ask are getting filled? What's the bid support? The bid support's not there. And you think, in your thesis is that this is a long trap, you could short into that. It depends on when you want to do it. Do you want to wait until after these asks get filled? I usually, if I see bids come in like this, I usually like to see, okay, let's see what type of push happens. If you get a push and I see the bid pull, going right away. That's what I did. And what am I risking? I see 620 up here, and also I saw this guy come in right here, right before the dump. But I was like, okay, 620. That's another level where there's a good amount of asks that are being stacked. I can short into this push, and I can risk up here because that's the order book is telling me where the resistance is going to be, right? It's a lot of people spend a lot of time drawing lines on their chart, right? Oh, there's possible resistance here and support here, and I think that could be fine, but I think the book is really what matters, right? Like that stuff could be fine if you get confirmation from the book, but the book is really where the orders are, right? Like you can literally, this is literally a tool, and I said this in other videos, where it doesn't show every single order that's on the book, but it gives you enough information to make educated decisions about where resistance actually is, about how a rigger is actually moving the stock. What's there's no bids down to 5.6, falls right down to 5.6. That's why so that you can see um, just how empty the book is, where it's likely to find support, and that type of thing. Uh, and yeah, I mean, really, oh man, there's so many good examples. APLM. uh, but one of the big lessons is, man, on these, just realize on these extreme moves, these high relative volume, big pushes that seemingly come out of nowhere, uh, these are really the moments where order book manipulation is the most important, and it's also the moments that you have to make decisions uh, about what the stock is going to do, right? I call these like do or die moments, right? These like crazy high relative volume pushes through key levels, and you could start. Here's INVO on the crazy INVO day. Here's 600,000 shares straight up, no bid support. Start getting new. There's ask up here. That's good to see. They start stacking new ask. They start stacking even more new ask. And then you see no bids to the downside, right? And that's what leads to this down halt rollover move, right? So it's understanding the games, and then you just have to differentiate between what aggressive moves are likely to continue, and more oftentimes than not, it's follow up bid support, right? And on the short side, it's these aggressive moves that don't have the follow up bid support, and you get games like this ask got filled right here, no follow through. There's no appetite above this ask getting filled. Comes back down, more ask gets stacked. So you're reading what's happening on the ask after the push, and you're reading what's happening on the bid. You're looking at the structure. INVO had a 400% squeeze at market open. So it's obviously extended, right? The more extended a stock gets, the more likely long trappy stuff like this is going to happen, and that type of thing. So yeah, there's a lot to learn, but it's an interesting tool. I love using it to determine, hey, if I think there's a long trap, is there a lack of bid support? Good. Is there ask being stacked? Good. Are there ask even higher than my entry that I can risk? Good. These are all good things, right? I don't have to guess where resistance is going to be. I can form a thesis based on the book about what's going to happen with tighter risk and big reward, which is how I like to trade. So, yeah. So a lot of counterintuitive stuff. Stuff like on the long side, like I always say, deep, quick pullbacks like this can be strong because the order book is so empty to the upside, right? Um, you know, high day clear out, 10% pullback. Look at this. Here's the high day clear out. Here's the 10% pullback on CLLS. Tons of empty space. That doesn't necessarily mean it's always going to squeeze, but it's important to start reading bids. It's important to start reading the reaction, especially if you get a high day clear out that starts bouncing and soaking, right? If any short seller who's shorted a fake breakout and had it come back up knows what this soak looks like. And sometimes the soak is fake soak. It goes, it makes it look like it's really strong, but it ultimately goes down. But in this case, there were a few bids down here, but really the big one was here. Somebody comes in and throws up, you can see 73,000 shares here, and then they follow it up here, right? Like they're letting it bounce. They're soaking it with a few bids. Nothing. There's definitely empty space to the upside, but then it's when they start initiating the squeeze, right? They'll throw up. In this context, in the context of a high day clear out short trap on a stock with good news, 80,000 shares on the bid supporting the stock, that can lead to a massive squeeze, right? So, yeah, hope that was a good one. I talk about this in my videos. but I did want to make a standalone video going over some Bookmap. This is all from my Discord. You go in here, see some examples. I try to keep it updated. I post a lot in the trading room. I throughout the day I'll be posting stuff I see and um, important price action, interesting moments, and there's a lot more context in the actual trading room, which you could see if you join the Discord. And then you could also see all this stuff too. You can also see all this, um, all these examples of short traps that squeeze. What did the book map look like? This is a controlled walk down, lower highs, lower lows, high day clear out. They throw up a 50,000 share bid before the squeeze, right? And there's even more bid, and there's a 30,000 share bid even farther below. So you'll see plenty of examples long side, short side, and yeah, you can really see uh, you can really see a lot more examples of the stuff I'm talking about. So order book manipulation, especially on low flow, it's very important. Good for entries, good for risk, good for forming a bias, good for good for a lot of stuff. You'll have tighter risk and better entries. But again, the hard part is understanding the structure, understanding the context. That's always going to be the hardest part for any trader. Um, it's hard for me. I still make wrong reads, right? Just there's times where my reads aren't good and they don't work, right? Nobody's perfect, but um, that's really you know the key is understanding the greater context of the trade, right? So anyways, hope that was a good one, guys. Information down below in the description about my Discord if you want to join. All right, see ya.